So guys, what I want to be talking about today, especially for the next hour or so, is how Forex crosses actually work. Now, in my experience, and when teaching people Forex from all across the world, when you ask most people how do Forex crosses work, they actually don't know. And many people don't actually know that Forex cross doesn't even exist. I see it all the time on social media, especially when I'm teaching in classrooms. People say, I'm a pound Aussie expert, I'm a pound yen expert. What if I told you that those crosses do not even exist? So early in my trading career, I had many favorite Forex crosses. Now, one of my favorite ones used to be Euro Yen, and I used to trade around 132.50. And let's just say that I would draw 50% fib, Bollinger Bands, trend lines, previous highs and lows, double top, double bottom. When drawing all of these different things and components onto my charts, and also looking at macros, whatever level I would draw on as level of resistance, and regarding my trade in particular, the level would crash through and I'd get stopped at that position. And I couldn't really figure out why, because I'd applied everything that I could onto that pair for my analysis. Now, what I didn't realize was that Euro Yen doesn't actually exist. It's actually a derivative from two core pairs. What I'm going to explain for you guys today is how exactly that works. So what I want everyone to do is actually pull out your calculators and pull out the correct charts, and I'll actually be showing everybody in the room how we actually get to the calculation of these crosses. What I want to start with is pound yen. Now, for everybody that doesn't know, pound yen does not actually exist. It's a derivative. It's not real. So let's do the maths. So currently, sterling, pound dollar, is actually trading at 139.132. We're actually multiplying this by dollar yen, which is currently trading at 109.57. Now, the reason we're actually multiplying it is because the dollar symbol is on opposite sides of the pair. Now, by times them together, you actually get pound yen, which is actually, do you want your calculator right now? That's why it's 15243. And that's how we actually get the calculation of that cross pair. Now, if we actually learn how to use the cores properly, this can actually become a strength indicator to actually help us be an extra confluence on top of our bias. The next one we're actually going to go through is Euro Yen. Now, Euro Yen, as I mentioned, doesn't actually exist. This is a derivative made up of Euro Dollar and Dollar Yen. So let's actually get a calculator that one more time. And now Euro Dollar is actually trading at 1844. And we're actually going to multiply this by 109.57, giving us the current price in the markets of Euro Yen of 129.77. Now, there is one exception to this, where we actually divide the two prices together. Now, this actually only happens if the dollar symbol is on the same side as the other one. Now, perfect example, CAD Yen, one of my also favorite pairs. CAD Yen is actually a derivative made up of dollar yen, and of course, dollar CAD. Dollar yen, 109.72. Dollar CAD, 124.98. Dividing these two together gives us the current market price of 87.77. Now, what I'm going to do in a minute is I'm going to pull up the charts behind me and actually show you again how we can actually add this simple bit of information and actually look at this as a ratio and look at this as an extra strength indicator. This is probably the biggest and most important and actually valuable RSI you can actually get in the markets. So everyone, let's look at a live example. So what we're going to look at right now is, what we're looking at the cross right now is pound yen. So what we have drawn to the upside are two levels of resistance. So the first one, I've got a 153.53, and the next one I've got a 153.81. So they're my two upside targets where this pair can go next. Let's go ahead and actually measure the pip difference between the current price to there, which is around about 75 to 100 pips. We can call it around 80 pips or so. So I'm going to keep that in our back pocket. Next, we're going to go to dollar yen because we need to correspond with one of the major cores that makes up pound yen, which is dollar yen. So again, from the current price, I have an upside target of where this pair can go next at 110.06. So again, we're going to measure the price difference between current price to that next level of resistance, which is around 30 or 40 pips. Now, the last pair we need to look at, which again makes up the derivative of pound yen, is pound dollar. So once we get to pound dollar sterling, as you guys can see, from the current price, it's got some movement to the upside to the next level of resistance. So let's go ahead and draw that on now. So taking a measuring tool,
So from the current price, we've got around about 50 pips to the next level of resistance. Now, as you guys can see, just going back in time, why I have this level drawn at resistance. So what this is basically telling me is going back to the cross I actually wish to execute on, which is pound yen, that if we were to combine the differences amongst the two cores and consider the difference on this cross, that we've got some movement to the upside to go on all three of the pairs, because this will give us an extra strength indicator to see where we want to go next. So again, dollar yen, nice 32 pips to the upside. So if we get movement further here, and then we get the same movement, or not the same, but we get movement on pound yen, pound dollar. What we want to try and get on pound yen is that push to the upside. Now, if all threes come together, I can bet you my bottom dollar that even if one of the cores, either pound dollar or dollar yen, hit that level, that it will take pound yen with it. So that's the calculation that we can do to actually execute on a cross by using two of the main cores. Hope that example was easy. I'll do another one in a second for those that do not understand. So guys, on my second example, I'm going to look at euro pound. So again, this is a cross made up of two derivatives. So I want to explain one thing. There's not always solid examples, and it doesn't always happen, but when it does, it gives us that extra higher conviction on a trade opportunity. So let's look at euro pound. Currently, we have a level of support that it's just breaking right now, currently at 0.8500, and I can see a downside potential going down to 0.8473. So that is a level that we think euro pound, and let's go to a weekly time frame. And as you guys can see here from previous levels, this is a very, very strong level of support. So that's why we are expecting to come down to that level. I'm going on to a 4 hour. You can see that in a more of a zoomed in time frame. Now, what we want to try and keep in mind is that this is made up of euro dollar and pound dollar. So what we need to do next, as you guys know, is go to euro dollar. So euro dollar is actually, let's go and find it. So euro dollar here, from the current price at 1.183, where I feel like it will come down to next is this 1.177 level. As you guys can see from previous support on this 2 hour time frame, it's been a pretty strong level in the past, and that's where we think it will come down to next. So again, we're trying to build up a profile, and what we're going to do next, as you guys know, is measure the pip difference. So for me, it's around about 50 pips or so before it will come down to the support level. Now, next we're going to look at pound dollar, which we already looked at in the first example. So we already know this is 50 pips or so for it to get to that 139,900 level. So we already know where we're looking at on the two crosses on the two cores for the crosses to work out. So in essence, what we need is that ratio needs to increase on one, decrease on the other, so we can increase on the other. So and that's what we're looking at euro pound. So euro pound is my next opportunity is if it comes down to the support level. I would then be able to look at my two cores, because what I want to try and basically explain is that what we need to happen is on pound. Now pound's more of a stronger mover. So we need to, again, 139.89 is where we want to get to. Next, on euro dollar, this could even potentially stay where it is because it's quite a consolidating pair. So even if one of them two work out, that's when we're going to see euro pound trading at 84.73. So we need everything to come together, guys. And again, this can be that strength indicator I was mentioning before. Now, again, one important thing is if both pairs move in the same direction, guys, that's a dollar move. Now, I'll actually explain this a little bit later on for a lot of the students of Astro. But what I'm explaining is that we can actually take the crosses apart, and actually this could be a dollar move because we actually have a dollar component within this example. Hopefully that makes sense for everybody. But guys, this is a good way to look at crosses, as I believe 99% of the retail market do not even know how crosses move and how to actually use the core currency pairs in correspondence so we can actually get an overall stronger bias in the trade that we're looking for. Hope that helps everyone. Thank you very much.